Hey everyone, we're here with Mac Church with Atlantic Coast Mortgage. He's been in the customer service field for 35 years. He has been in the banking and mortgage industry for 18. He's serviced over 4,200 loans. He has helped a collection of folks, everybody from new home buyers, veterans. We've done refinances, and any home buyer pretty much. If you need a mortgage, Mac's your guy. He's also been voted Best of the Burg for 3 years in a row, and we're hoping that it'll be 4. If you haven't voted yet, you should vote.
Cheers.
So today we're going to be getting into your role as a lender in a real estate transaction. As a lender, what is your role in a real estate transaction?
Well, my role is to help someone buy a home. Of course, if you can't pay all cash, then you need a loan. And in the mortgage industry, any lending institution will lend money out, and I'm the one that helps an individual or family obtain that loan so that they can buy their house. It's called a mortgage. The bank or the institution that lends the money is a mortgagee, and the person that is getting the loan is called a mortgager. So my role is to take that person from A to Z, get them pre-approved for a mortgage, help them through the process of getting the mortgage, and then closing their loan so that they can own the home.
Awesome. So you're the go-to guy.
I am the go-to guy.
To make things happen.
That's right. You cannot buy a home without me, unless you have cash.
Really important role.
Yes.
So then how does a mortgage work?
Based on, or they get their mortgage based on whatever loan product they want that meets their needs or that they can qualify for. So there's a ton of different mortgages out there, and an individual will come to me, and what I do is work with them to find out what's going to work for them the best, what's going to meet the best their financial needs, and it has to incorporate what kind of loan that they qualify for. So there's a gazillion different loan options and different products that they could qualify for, and it's my job, my role to figure out what is going to work for them the best. And I don't take shortcuts, and I make sure that we always provide as many options as possible so that way they can figure out what really works best for them, and then I will help lead them down that path so that they can be a successful homeowner.
Shortcuts are never good.
No, we do not take shortcuts here.
Well, speaking of qualifications, what's the difference between like a pre-qualification and a pre-approval?
Okay, so pre-qualification is when a would-be homeowner puts an application in, and we run their loan through an automated underwriting system, and that automated underwriting system will spit out if they're either approved or if they're not approved. That's a pre-qualification. A pre-approval is when we actually verify the information that they put into the system. So I will tell you that about 95% of all applications, the income on there is incorrect. What one might think they make, they actually probably don't, because as a mortgage lender, it's not just what you put on the paper. It actually is a lot more in-depth than that. And we have certain rules we have to go by with respects to different kinds of income and what we can include, what we can't. And so we have to use all that to figure out what that person is actually really pre-approved for. So what we always require is that when someone is going to put an application in, if they want a pre-approval, we request, we call it the 222 rule, 2 years of taxes, 2 years of W-2s, most 2 recent pay stubs, and most 2 recent bank statements. That's usually enough information to get an actual pre-approval. Of course, that doesn't fit every single person's profile, so we may need more information than that, depending on the type of work they do. Self-employed borrowers, of course, we're going to need a lot more than that. Anyone that may work on commission or has variable hours, we may need verifications of employment. But the main difference is the pre-approval has actually been verified. And of course, when you're out there with your clients showing houses, the one thing that a listing agent is always going to require is a pre-approval letter. So anybody can just hand you a pre-qualification letter, but it's not really valid unless they've been pre-approved.
So do you hand out the pre-qualified letters?
Absolutely not.
Yeah, just the pre-approved?
Absolutely not. Yep. Because your name is on this transaction, and my name is on the transaction. We want to make sure that we have a good reputation in the community, and that when you have a client or I have a client, that listing agent knows that it's going to be good and they don't have to worry.
Thank you for doing that.
Sure.
We appreciate that.
Can you kind of summarize why you think, or why rates got so low?
Well, it all started with the housing crash back in 2008. And the economy, of course, went into a recession. And at that point in time, the federal government decided, that we need to keep the industry going, because the housing market is really the backbone of the economy in this country. And we saw what happened when the housing market crashed. Well, so did the economy. And so they started lowering the interest rates to get more people back into houses, because there was such a huge foreclosure and short sale market. And people were afraid. People were afraid to buy houses. So over time, just due to the economy, they started lowering rates to entice more people to buy. But also, there were a lot of crazy loan programs out there that people were in, and those programs their payments were actually rising. So they needed to figure out a way that people could get out of those programs into a fixed rate mortgage at a lower interest rate to help them keep their houses. So that's how the rates initially started to be low, and just over time, which is the way the economy was, they just kept getting lower and lower, and the federal government had put the prime rate at 0, so which meant that anybody lending money out were getting the lowest rate possible to be able to actually lend to consumers. So that's why the rates got so low.
Just for fun, what was the lowest rate on a loan that you serviced?
I had a 30-year fixed locked in, and it was one day only, where the rates just happened to drop this one day, and I got them locked in at a 1.875.
Wow.
And they will never refinance.
They are locked in that one.
Yes.
One day only, so then rates fluctuate. As far as listeners, rates
Correct.
fluctuate.
They fluctuate
all
daily,
the time.
sometimes more than once in a day. So it's all about timing. All about timing.
Awesome. As we've seen, the rates have gone up a little bit this year, and everybody is talking about how they're going to go up. What do you think, in your opinion, and from your experience? Nobody has a fortune teller ball or anything to say what will happen, so don't live off of what he's saying. We're just hearing his insights. What do you think that might happen in the next year?
Okay. So one really cool thing is I do a lot of seminars, and I read a lot of information, and I look at graphs, and everything's cyclical. So we are in a rising rate environment, but the good news is that they will come back down. Everything kind of goes like this. So right now, because of COVID and the fallout from that, and now the war in Russia and any kind of economic pressures that's put on the economy, the rates have started going back up. And in order to curb inflation, you have to reduce the demand so that the supply can increase, which we all know that right now in the housing market, it's a low supply. So raising interest rates will kind of put some people on the back burner, or they'll decide, hey, I'm going to wait. And as that supply or the demand goes down, then there'll be more supply of houses, and then once the market catches back up with itself, then the rates will come back down. So my prediction is probably the next 6 to 19 months, somewhere around there, we'll continue to see rates higher. But if everybody can remember, we are actually still in historically low rates. The average rate over the time, I guess, since the 60s when they started tracking all this stuff, was probably between 8 and 10%, and we're still in the 5s right now, which is phenomenal. So we're still in a really good spot.
I've heard a lot of folks say that they remember having a mortgage at 18%. So I'm really grateful that we're not sitting at 18%.
Yes. And back then it was 20% down only, so they didn't have, yeah.
Well, that's a lot of great information. We appreciate you touching on those topics. Could you maybe just go over what loan products Atlantic Coast does service?
Sure. So we actually service every loan type with the exception of 2. We do not do land or lot loans, and we do not do home equity lines of credit. But everything else, as far as residential goes, we do make those kind of loans. So the whole gamut, from first-time home buyers to veterans to FHA. We have lots of grants and assistance programs for those that don't have down payments. So we kind of are across the board.
Nice. USDA, RD, everything.
Yes, USDA, RD, Virginia Housing, which is a first-time home buyer program, and we also have grants through FHLB, which is a Federal Home Loan Bank, and that provides down payment or closing cost assistance to lower income families.
That wraps up our first part of our video series with our local lender, Mac Church, with Atlantic Coast Mortgage. Stay tuned for more tips to make better informed decisions for your home buying purchases.